My name is Alexa, office manager here at the BPM RIA office, only chapter in South Florida that is approved by the National RIA guys. Welcome, welcome. We're at BPM RIA, Broward, Palm Beach, Miami Real Estate Investors Association. Today we have Paul Regan, president of Flipper Loans. He's going to have more of like a podcast style webinar today. I hope you guys like it. And we're going to talk about how to navigate your deals with hard money and alternative financing. But like Paul always does for us, he always does something special for BPM RIA. This is just for the people that are in here. So thank you guys for being here. You will be rewarded if you are active, if you take action with Paul's giveaway today. For all attendees, Paul will give you lender credit on each of your first 3 deals with Flipper Loans for attendees only. So if you're not here right now listening to this, I'm sorry. Replays not available. If you're here live, I will know because you all registered for today. So thank you guys for being here. And here you are. I'll pop this in the chat for you guys so you don't forget it, and show you where you can find Paul on our website because he is a corporate member. So announcements, everyone. We are super pumped for next week. Next week is going to be huge. We're going to start off the week with a free webinar, and then we have an in-person event. So you will need to RSVP for this event. It'll be in Boca. There's going to be networking. There's going to be hors d'oeuvres, desserts, drinks. Gosh, I shouldn't have told you that, but it's going to be a really great event. We're going to be diving into a seminar after the networking on finding funds for real estate. And this will be with DRIA, and it's limited seating. So go to the website right now and RSVP. You can always find all of our events on the website in the upcoming events tab. So after Wednesday, we'll have another free webinar. This is going to be a really good one, guys, and something different. We tried something like this last month. We're doing it again, except we're going to be going into tax horror stories. So register for that free webinar. It is going to be very interesting. And then again, Paul blessing us with his presence. We are going to have a Saturday in-person workshop in Pompano Beach. This will be sponsored by BPM RIA and Flipper Loans. So we're going to dive into learn how to wholesale and find deals for big profits. This will be from 10 to 12, but we will maybe like stay a little bit behind that time. So put 10 to 1 there, but 2-hour free in-person workshop. And again, limited seating, guys. So you're going to want to RSVP on the website, register and save your spot for all of the in-person events. So we'll also have Jose Ramirez back again. He's going to be with us back-to-back weeks, but he's going to have, his very helpful seminar on his tax planning strategies that really do help us here in so many areas, as you can see. So please go register for that one. He always kills it and opens our eyes to a whole new world in tax. So moving right along, and I'll put the links in the chat for you guys, but as you know, the best way to keep up with the events is text alerts. Text BPM REIA to 954-800-6961, and you will get alerted that we have an event that day. All righty, moving right along, people. All right, boot camp. Next boot camp is September 10th and 11th. As you know, many of you know, the boot camp is a 2 full day training. This is 2 full days with us. It is virtual, it's on Zoom, so you can watch this from home, although you're going to want to pay attention to every single bit of this training. It is cameras on. So cameras on, mics on, a lot more participation than, we're not as close in the webinar, but in the quick start, it is cameras on, full participation. We're getting into it, 4 guest speakers. We have the link in the chat so you guys can see who those speakers are, what companies they come, everything. So 4 amazing guest speakers. Go press the link in the chat to see who they are. And then our mentors also join us. This is led by Anish, but we do have some mentors that pop in there And honestly, they stayed on like basically the whole boot camp last time. So if you want to get to know the mentors, get to know us very well, spend 2 whole days with us, and it's a money back guarantee. So we do have member and non-member pricing for that. And thank you guys for responding to the poll. I will definitely get back with more information on what the boot camp entails. So thank you guys. I appreciate that. Memberships. So members do get amazing perks. So like I said, we're the only local chapter in South Florida that's approved by the National RIA. If you don't know what the National RIA is, go to nationalreia.org, and you can see all of the amazing things that we get because the National RIA has approved us down here in South Florida, which is not easy to meet compliance with them yearly to do this. So besides that, members get in free for the in-person networking events. Our next one is August 3rd. It is coming right around the corner. They get discounts to all of our seminars, all of our special, everything. So they either get free, they get a discount, their guests get discounts as well. So if you have any questions about a membership, thank you guys for responding to the poll again, and I will get back to you with more details on that. And one-on-one coaching. So some of you guys don't know, a lot of you do. We do have a lot of students in this meeting today. So we do offer one-on-one coaching. This is a very unique program. We put up 100% of the money for our students' deals and split the profit 50-50. You are matched with a mentor. It is truly one-on-one. If you'd like more information on what's included in this program, the pricing, how it goes, go ahead, right to the website right now, and you are able to book a discovery call with me so I can give you an entire breakdown of everything that's included, and we can see if this is something that's a good fit for you and going to get your real estate career going. So go ahead and go straight to the website. I will put my email in the chat as well. You can email me directly and I can get you more information on the one-on-one coaching and mentoring that we offer here at BPM RIA. All right, and this is my direct line that's in the chat. So you can call or text this number if you prefer that. And always want to thank National RIA, all of our corporate members, Anish, everyone that's in this webinar today, especially Paul for giving us his time. So thank you, everybody. And let me know if you have any questions. Oh, and questions in the Q&A section. I know that we're going to be talking about a lot of different things in this webinar today. So pop those questions in the Q&A box down below, and we'll get into those.
Yep, great. Thanks, Alexa. Appreciate it. And so I know a lot of you guys already know us, or at least know me, because we've been doing webinars since the pandemic. For those, I do see a couple new names on here. So my name is Anish Dave. I am the president of BPM RIA. BPM, I know we changed the name this year. We were called BRIA. So BPM stands for Broward, Palm Beach, Miami-Dade RIA. And as Alexa said, we are a chapter of National RIA. National RIA is the organization that endorses real estate clubs. What that means for you, besides the great benefits, it also means they do background checks, criminal checks. I have compliance every year, and luckily I pass every one of those things. And it's one of those things that there's a lot of real estate investor associations out there. Our motto at BPM RIA is, real estate investing made simple. And what we're really committed to here is, because of the pandemic and we're doing a lot more webinars, it doesn't cost me anything for these webinars. And, I'm lucky to speak to someone like Paul Regan. We're friends first, besides, him being a vendor with our organization. I learn a ton of things in just basic conversations with this guy, whether it's over coffee, lunch, or, any kind of little quick meeting. I'm like, really, what about this? And so, what we decided was that I'm not an expert on hard money. I'm not living in it, the way Paul is to have, these webinars. And, I know a lot of guys, we kind of alternate on the webinars. So I know some of it's, I don't know, the easiest way is it's PowerPoint heavy sometimes. And sometimes that's a little bit draining and things go a little too, fast for me. And instead we decided to, like what Alexa was talking about, more of a podcast. So today's webinar is really about you guys. We are going to go over certain topics, but we can help answer any of the questions or concerns. If they are too specific, right, we might not get to them. You will have Paul's information. So you could always email me, or you could call or email Paul directly if you do have a specific scenario too. So without further ado, I do want to introduce Mr. Paul Regan, founder of Flipper Loans, a good friend. And I'll let you introduce yourself a little bit, Paul, before we kind of get to it. So the first thing that Paul has to do is unmute himself. I wish my wife says if she could put a mute button on me.
Is that better?
There we go.
There we go. I was looking for the here's Johnny.
Here's Paul.
Yeah. I've been doing financing for a lot of years now, and it's an interesting market. It's really interesting to have it. And they say that he learns from me. I figure I learned more from him than I could possibly teach him. And it's a great group to belong to. Thanks, Anish. And the industry is changing. Is anybody that doesn't know that the industry is changing doesn't have a television set. And with interest rates, inflation being high now, money is becoming more expensive, but it's still readily available for any good deals and any good borrower. In fact, a good borrower now has an advantage because his competition is less and the money is still available.
Absolutely. So go ahead and put in the chat if you've actually borrowed any hard money or actually worked with a hard money lender. So while we're kind of chatting, it kind of gives us a good idea of who's listening in too. So that portion. So Paul, one of the things that I'm going to kind of just touch on the interest rate thing. So you've been around. I'm going to say I'm around without saying that we're elderly. It is the easiest way I could say that. What's the highest interest rate you've seen in your lifetime? Generally, not hard money.
Hard money used to be 15%. And
but I'm saying, what about like your general? I'm even talking like the 80s. Like if you went to Bank of America, well, it wasn't Bank of America, but whatever lender, Citibank or these guys.
15% is as high as it's ever gone. Once it gets above 15%, it doesn't make any sense to borrow, with the exception of say credit cards. But 15% is still, it's hard to be successful doing a deal borrowing at 15% anymore. And but right now, DSCR loans, regular convention loans, are back to normal, let's say. We spent 2 years of interest rates being below normal, historically low. And now they're back to normal.
So let's talk about that, right? So, everyone's afraid, right? I know they like interest rates on conventional. When I say conventional, let's go into your bank, showing your pay stubs. And as little as I want to say maybe 6 months ago, it's like 3%, 3.25%, around there, give or take. And now you're closer to almost 6%. So it's double, right? But, so my background, some of you guys may or may not know, I was in the mortgage business, had a mortgage company. I worked at banks. I'm still licensed as a mortgage person. When I was doing loans in 2002 at the bank, or actually 2000, 8 or 9% was normal. Yes. And people were buying, right? So one of the things you don't want to be afraid of is interest rates, right? You're gonna be afraid of a lot of things. What it's gonna make you do is you just have to analyze the deal, right? So it could be 12 or 13% you're borrowing, or 14, but if there's enough money in the deal, it's still a go. It's just a conversation on, what the interest rate versus what the payment is, and cash flow or other things going on to it.
Here's the reality. If the difference in interest rate of 2% affects your deal, you haven't bought it right. Because on a short term, on a 1 year note, the 2% should not bother you at all. The 2% increase in rates. You should be making 20% on a deal. And if you're not, if you're making 20%, the difference between 2% and and breaking even is, it's not, the difference between paying 8% and 10% or 12% for the money should not affect a deal on a buy, fix and flip.
Yep. So a lot of guys, right? Like, so when would you, so Paul actually does, you also do regular loans also, right? Or,
Yes, I do DSCR loans, actually. For the last year and a half, that was predominantly the business.
So for all you non-mortgage people, right? So you're talking to two nerdy guys here.
Right.
I know mortgages. Do you kind of want to talk about what
Yeah, okay. A DSCR loan is debt service coverage ratio. It's used for buy, renovate, refi. It's the whole loan is based on the income versus the mortgage amount. And 6 months ago, we were able to put together loans at 3.5% for an investor, no doc, no tax return loans based on the rental income. Today, that same loan is going to cost you 7%, low sevens.
Yep. So listen to what he said on that, first of all. So a debt service cover ratio loan, it's really about the asset and it cash flowing, right? So that's what they're really looking at. You heard what he said, right? No income. That means no income from you as the borrower, right? No pay stubs and no tax returns, or did you get
no tax returns? Full credit and an appraisal, and it's based entirely on the income of the property that you're financing. Okay,
so I'm gonna kind of dive in a little more.
Go ahead.
So I find a property, right? It's got income. We figured out the debt service, right? What the loan is. When we say debt service, what we're talking about is the loan. What are we gonna have to pay back? And so the bank is looking at income, and when we say debt, your debt service, we're also including taxes and insurance, correct? Right. So we want to make sure the income's enough. And well, what about, so it's really asset based. How about, how much money down? So do I, as a borrower, have to put any money down on a deal that's already covering everything? Let's start with that.
Here's where that loan comes in. The Broom method, where that loan really comes in handy is when you buy it, you renovate it, and then you refinance it and you keep it as a rental. With the right borrower, you can buy it with 90% loan and 100% renovation costs. So now your finished product, you're into it, you probably have 25% equity. Now you can go ahead and refinance that and quite possibly take all of the money that you invested back out. You have little, if any, money invested in it. You have 20 to 25% equity in it, and you walk away with a positive cash flow.
Yep. So to kind of simplify that, if you find a property, right, from one of these wholesalers, our wholesale list, a lot of times you're going to have to do something to it, right? Like you might have to fix it. It might be a light rehab. So what you're going to want to do, right? So let's talk about that between normal banks. So if, when I say normal banks, I'm using the big five, Bank of America, Chase, Citi, they're all pretty much, Wells Fargo, they're all pretty much the same on what they're looking for. If, let's say you have a great job, right? And you're a W-2 employee and great tax returns, and you could afford to buy this house, with 10% down, 5%, 10% down, your numbers make sense. So a lot of people in South Florida, that usually doesn't work. But let's say you're one of those few people that can. Now the issue becomes the property, right? So, Alexa's approved based on all our income, but maybe the property's not. And, what we're talking about is maybe it doesn't have, the roof is bad. There's a skylight in the roof, which shouldn't be, right? Or, the property itself, it needs a ton of repairs that the bank will say, hey, you know what, Alexa, you're approved, but the property is not. And a lot of people that don't know, they're going to walk away from the deal. They're going to say, hey, I don't have the cash for it. So now this is where you go to someone like Paul and you say, look, I found this property, and he's okay with that. So what he was explaining is if you have 10% down, right, he'll lend 90% on the property. And it's going to be 90% of the appraised value, right, is number one. And if you actually do it correctly, right, let's say the repairs, I don't know, $20,000 to $40,000, if the numbers make sense, the lender, Paul or his lenders are willing to give you 100% of the repair cost to fix it. Hopefully everyone got all that. So I know all right. So now indirectly it's 10% down plus closing cost, right? That's all you need. You do have to make payments monthly. So this is not one of those things so you do want to have some reserves because you're going to have to make those payments. It's not one of those things that you could pay at the end. Generally speaking, almost all the lenders I don't know any lender actually that does that, where you could pay at the end. They want those monthly payments as it's going. And, Paul and, the lenders, they want to make sure, right? He's a pretty nice guy, but he's not going to trust you fully saying, hey, give me all the rehab money up front, because they want to make sure as each step is going, they're going to give you some money. Okay, you're putting it towards the kitchen. Well, they might send someone out there to make sure that part is already done. Okay, next step, the roof. Okay, that's done too, right? So they want to make sure, they're nice guys, but they're the money guys, right? So they want to make sure on that deal that you're using the money correctly. And as I mentioned, if you don't have access to someone like Paul or hard money lenders, you would have walked away from the deal. And now what interest rates, I know obviously interest rates are going up, what range of interest rates on something like that kind of deal would you say, give or take?
Where the right person can still borrow money in the nines, high eights, low nines on that deal. And he's got to have experience, he's got to have credit, but it becomes a tremendous way to make money. It's highly leveraged, and you can do deals that you couldn't do any other way.
Yep. So let's just say anywhere from, high eights to maybe 11, right? Depending on experience, maybe we'll say 12. Let's just give you that number, just in case. And again, that's what we're looking at today. There are also points, right? So the lenders, those big, beautiful buildings downtown in every country, in every city are usually what? Banks, lenders, right? They need to make money. So there are points, generally speaking. And the points can be anywhere from, what would I say, 2 to 4?
2 to 4.
2 to 4 points. So what is a point? Got to put in the chat before I tell you what a point is.
A point is 1% of the loan.
Correct. So if it's a $200,000 loan and 1 point is $2,000.
Correct.
Right. So if it's 2 to 4 points, so you have to add in those costs. And what Paul was talking about earlier, if your numbers are so tight, right, that you can't afford that, it's probably not a good deal. That's probably the easiest way I could say that. If you're so worried about that end of it, it doesn't really make sense. And without getting super complicated, because today's kind of more of an introductory end of it, if you look down the road and you do a bunch of deals and you realize, what your cash on what you put in, you're going to see it explode, because that's what you're really looking at. And when it comes to how much money did I put in, what was my return on capital? And
that's the key. Cash on cash return.
Cash on cash. And Paul talked about leverage, right? So I know some of you guys are experienced. So what does leverage mean? It's using other people, and I guess in life, you probably don't want to say, hey, use other people, but in lending.
The advantage of leverage is instead of doing 1 or 2 houses a year, you can do 3, 4, 5 at a time if you have proper leverage. Instead of putting all of your money down on one deal, you can split it and do 4 or 5 deals at the same time.
Yep. So like if you only had $100,000 in cash or 150. So when I started, right, I didn't know, this is way back, about hard money or other alternative financing. I literally was doing one deal at a time, meaning I fixed it. It took a couple months for that. And then it took a couple months to sell it. And then I was able to move on to the next project. So I had a lot of dead time waiting for money to move on that portion. So now let's say you fix it. So now I'm going to go back to that, a DSCR loan. So now you fixed it. It looks great. You have a ton of equity. And now you want to refinance it. And that's when you usually use that DSCR loan, that debt service loan. And, and there's a question I know Jose's asking, how long are those debt service loans generally speaking?
Debt service loans are 30 years. You can make that for a 30-year loan. You can make it shorter, obviously, but the ideal is you put a 30-year loan on there and the loan stays the same and the rents go up and you make more money, your profit increases every year.
Yeah, and like if you really do that right, so traditional, when I'm saying traditional, I'm talking Fannie Mae, conventional loans, Freddie Mac loans. The DSCR loan, it's a little bit more an interest rate, but it's not a bad loan. It's minimal, like, like you might be able to get a little bit better, if you could go conventional, but versus the hassle and a lot of other things that go on, it's usually not that easy. And then of course you want to get your money back out pretty quick too. So I think that's really important.
You build wealth by having DSCR loans, retaining the property and collecting rent for years. You get cash flow and nice watches by flipping them and getting $20,000 at a time. The way you build wealth is to build a portfolio and make a few $100s on each property on a monthly basis. Your asset value goes up, you have positive cash flow, and you move on to the next one. That's how you build wealth.
Absolutely. And Kenton's asking, with the DSCR loans, does the property have to be currently rented, or can rental projections be used?
Rental projections can be used.
Yep. And so do you guys do you get the appraiser to do a rent roll or
Yes.
On that end of it to figure out on the projections? Like how do we know what the projections are? Are you going to take my word for it? I promise.
Yeah, here's how we take. But normally what we do is you do an appraisal. If they're not rented, the appraiser establishes market rent. And on vacant apartments, he would take the market rent, take 10% off of it, and base a DSCR loan on that number, so that you can get a DSCR loan on a vacant property.
Got it. And so even talking about more specific on a DSCR loan, again, I'm trying not to be so crazy on this, but let's say the payments, right? The loan, the taxes, insurance is $2,000, a month or on that.
Right.
Does the income have to be, can it be exactly 2,000 or does it have to be?
It's got to be
more?
2,200. 2,200. You need a 1.1 ratio between income and debt and service.
So the bank, what they're looking at is they need a little spread in case something happens, right? What happens if, 1 month or 2 months, you lose a renter, they don't pay. So, they're still trying to protect their butt also on that portion. So it's important. And I'm going to kind of change the topic a little bit too, because before we got on, all we keep talking about is what? Inflation, the big I word, inflation, right? So if you guys have been looking at the new, it's been a little over 8%. I think this month they were saying it was 9.1%, right, Paul? I think that's what
Yes.
I saw too on that portion. What's your thought about inflation? So, I mean, in general, besides it sucks, but.
Well, actually, inflation helps the people that owe money. If you borrowed $100 and at 10% interest, and there was 9% inflation, the next year you're paying that $100 back with $91 in capital, because your money decreased, or the value of the dollar you're paying it back with. So inflation benefits those who owe money, and it also benefits those who own assets. It
Right.
doesn't benefit the guy that's got a job, he's getting a weekly paycheck, and he's got to buy his gas and his groceries.
Yep. And so I'm going to clarify that too. So when Paul says people that owe money, let's talk about that. We're not talking about credit cards.
No,
We're not talking about car loans, right? So we're specifically talking about housing or an asset tied into each other. That's appreciating. Let me rephrase that, right? So don't think, hey, I'm doing good because I have credit cards, inflation's helping me out. The answer is no, right? So we want to make sure that we make that distinction for people. So it is important, we're actually leveraging the bank's money, right? So let's talk about inflation on a smaller scale, right? As bad as inflation or the things that are happening, the banks, they're okay with it to an extent. And I'll tell you why, because they're passing the inflation to consumers. And what I mean by that is, you have a savings account, or you have a certificate of deposit, a CD, a money market, right? So you're getting less, right? Your savings account is probably less than 1%. I don't know, a CD, if you're lucky, maybe it's 1.5%. I don't know, whatever the number is on that. So that spread is going to the consumer on that portion. So that's why banks, they're still indirectly protected by it. A good hedge on inflation, is other people's money, meaning leverage, private money, and then real estate, right? So why, and I know you're talking about long-term wealth. Why is inflation good for, not good, but how are you protected to an extent? Would you say, Paul?
I'll tell you what I've done with my personal real estate investments. I borrowed as much as I could on them 6 months ago, 9 months ago. Now, two things are happening. One, I'm paying it back with a dollar that's worth less. My property is appreciating in value, and my rents are appreciating. My rents are going up. So I benefit by owning the real estate because I'm gaining more of a cash flow on a monthly basis. I'm gaining more equity, and I'm paying it back with a dollar that's not worth as much as the one I borrowed. It's a beautiful thing. I like inflation. Now, my daughter complains that the price of gas went up, that the price of groceries have gone up. And I suggested she ask her boss for a raise or get in her own business. But inflation can help. Inflation helps certain people. It hurts others. It hurts W-2 workers.
Yeah, absolutely. And again, having appreciating assets and leverage. I think that's always really important. So we're kind of, because I know everyone, like, I get those questions all the time. Oh, inflation, what about this? What about that? It always kind of freaks everybody out. Christy's actually, can the down payment be taken from a credit card? I know we're talking about the 10% down.
No. If you have good enough credit to get that big of a deposit, you should have some cash on hand. You don't want to pay 22% interest on any money. And your credit card's paying 22%.
Yeah, I would say, I mean, you can theoretically, the lender would be okay with it, but I would agree with Paul. Don't do it. Either start saving a little bit of money, or, I'm telling you, throughout, if you come to our in-person meetings, or, you're involved, there will be a lot of money partners that just don't have time. Right. So you might have all the time in the world and the education. So if it might be, I'm just going to use, you might need 10,000 for a down payment or 20,000. You'll be surprised how many times it might show up if the deal's good enough on that portion. But the key is to have the education. I'm not, and again, I'm the same with Paul, because like, usually if you're taking that cash, it's going to be a cash advance. And if something goes wrong, it's a house of cards. So like, I would highly not recommend that personally. So Victoria's asking, and Victoria, any prepayment penalties on, I guess I'm going to assume on any of the loans, the DSCR or?
Yeah, it depends on you structure the loan with or without them. You can structure a loan with prepayment penalties, in which case your terms will be better. Your interest rate will be better. If you structure with no prepayment penalties, you're going to pay points to compensate for it. If you're going to hold the thing long-term, you want prepayment penalties. If you're going to be in and out quickly, obviously you don't want prepayment penalties. That's a tongue twister. Peter Piper picked a pack of pickled peppers.
Yep.
Yeah.
So it just depends. I mean, there's different options, and a prepayment's not bad all the time. Some people are like, well, I'm not sure. If you're going to keep it, like, the people that you probably did a year ago or even 6 months ago, and they have a prepayment penalty of 3 years, 2 years, and they're using this method, they're not going anywhere. Realistically, unless they do sell it. And even with that, I've done that with a prepayment penalty. I just build it into my cost on that portion. So it's all relative, and you just got
a negotiated number. It's a negotiated number when you're taking the loan.
Yep. Ed's asking, can you use self-directed IRAs for down payment?
As long as it's cash, the bank doesn't care where the money comes from.
Yeah.
As long as it's liquid.
So Ed, you would have to actually liquidate it you would actually have to liquidate that portion of it. It depends on if you're trying to buy it in your self-directed IRA. Those are non-recourse loans. I'm not sure, Paul, do you do non-recourse loans at all?
No,
It's tied into an IRA. Okay. Yeah.
No.
So most people, again, not to be too nerdy, let's talk about non-recourse loans. Basically, what you're saying is that, hey, if this thing goes to crap, they can't personally go after you. So banks usually want a personal, security in case the loan goes back. So that's a recourse loan on that portion.
as I say, if you won't stand behind your loan, why should we? And so you're not going to get non-recourse loans anywhere.
Yeah, very difficult. So Jose's asking, what's a good benchmark cash on cash return in today's rate environment?
Man, I'll tell you what, I'm embarrassed to say what it is. A good cash on cash return should be 50%.
Damn.
Yeah.
Okay. Okay. All right. That's really good. So I could tell you some of the deals. Like, so here's the funny part is like our students in the program, I put up all the money.
Yeah, they're making
Right? So
100%.
their return's infinite.
Yes.
It's better than 50%.
Yeah, and
But-
actually, there are deals where I make, 4 figures, 5-figure cash on cash returns.
Yeah.
It all depends on the deal that you structure.
Yeah. It's so again, like you're talking about, combined. Paul, I didn't even ask you this, but how many years of real estate experience do you have? Give or take, you'd say.
How many years?
Yeah. Just so.
Probably longer than, I don't know, close enough to 40 that I remember. No, actually, you know what? It's be 40.
Yeah. So like I got about a little over 20 something. So like the reason we're kind of laughing, like you're talking to guys with over 60 years of plus experience, hundreds of deals, or probably been part of thousands of deals. I mean, I've been in, from as a realtor mortgage, well over, $250 million in transactions. And so as we're saying these numbers, it's a lot of experience that's going on there. You might be okay with, cash on cash, 10 or 20%. And the reason is because your cash is doing nothing, right? Like it's kind of sitting in a savings account, and then the other end of it, we're not even talking about the appreciation. So there's two different levels of that conversation. There's the cash on cash, and then there could be the appreciation down the road on that portion. I'm going to so what's your thoughts? I mean, we're talking about leverage, and I have my thoughts on this too, but I'm going to ask you, what do you think about owning properties free and clear?
Well, I think that's the most ridiculous thing in the world. It makes me crazy. Because you have zero leverage. You have all that money sitting there. The only thing it's earning is the appreciation, and which may be 4, 5, 6% a year. Where if you pull that money out, depending on how much you have, you can turn that into a 20 or 30 or 50, 100% return on your money.
Yeah. So that was a loaded question because I feel this exact same way as Paul. I know when I first started in real estate, and you got to put in the chat. So don't make me feel like the only person that thought this was like, hey, I want to own X amount of doors, right? Properties, but I want to own free and clear and just have passive income. Right? Like my goal is to own 5 or 10 or 20, 50, it doesn't matter what the number is.
I don't own any real estate that I currently have any money invested in.
Yeah.
It's 100% leverage by this point, which means
Yeah.
I get positive cash flow on something that I have no investment in. It appreciates. So whatever appreciation is, if you type it into a calculator, it comes up with crazy numbers. I'm a big fan of leverage.
Yep.
Leverage properly used.
Okay. So we're going to I'm going to dive into it. So I don't want you to leave this webinar saying, Paul and Nish said, it's not great owning properties free and clear. We are not saying that, right? There's a lot of different factors that go into this, right? Like sometimes you just want the peace of mind. I get it, right? Or if you're like my dad, like I don't want to owe anybody. He's 82 years old and that's, he's going to stick with it and that works for him. I got that, right? We're talking about real estate investors and growing your portfolio. in a faster way using velocity of money and other people's money. When we say other people's money, it could be private money, hard money, regular banks, not your money. What he just said that, Paul, that I thought was really important was on the properties he owns, he has zero money in it now. Right?
Correct. I think that leverage is a beautiful thing. Borrowing money is a beautiful thing, as long as you earn more than you pay for the money you borrowed. If you earn more on the money that you borrowed than you pay in interest, it's a beautiful thing, because now you're making money on someone else's money. And that's how you make money when you sleep.
Absolutely. Christy's asking what size properties we're talking about. Are they single family, 1 to 4 units, 5+ units? So what we're talking about, well, I'll let you talk about it. Go ahead.
I heard somebody say a long time ago, size doesn't matter. And I assume they were referring to real estate. Any size, 1 to 4s are single families, 4 to 8s are just normal multis, 8 and above fall into a commercial, but any size.
Yeah. And a good friend of mine, Michael Jordan, I haven't seen you in a while. He's asking, are you able to do ground up construction bridge loans?
Yes.
Part of a large project, 270+ units with mixed use. And they have a highly experienced in construction company. So yes, you could probably.
Michael, please contact me directly.
Yeah. So Michael, you're gonna owe me lunch at least. Yeah, just contact him directly. I know he does bridge loans. He does big loans all the way through. So Paul's, so Paul is not a one-trick pony, meaning he only does.
Oh, I would like to do that loan.
Yeah, yeah. So he has a ton of experience. I know we're talking about people that are getting started, but Paul works with experienced investors that have been doing it for a long time and leverage their business too. So
I can take that loan to Wall Street and get it funded, provided all the numbers make sense.
Yep.
And the experience is there. I'm currently doing 192 units of mixed use over in Port Charlotte.
There you go.
Putting it together.
There you go, Michael.
Yep.
Let's see. Christy's asking, if you look at a property that's sub 2, how soon after can you refinance? Is there seasoning?
24 hours.
There you go. Yep. Can you buy down the rate? And I'm going to say yes.
Yes, you can buy down the rate.
Yep.
Who was that that said? Was that Evelyn?
Yep.
Evelyn Bobo?
Yep.
Hello, Evelyn. Evelyn's one of my favorite clients.
Okay. There you go. Let's see. Do you provide loans for new construction? If so, can you expand on the requirements? So construction loan, we want to build to rent, build to whatever you want to do.
New construction needs experience. Yes, we do new construction, depending on your experience. Depends on, you have to have at least some new construction experience. Or what I've done, I've got a developer that does a lot of foreign national new build investors. And what we do is we put him on the LLC at 10%, he co-signs a loan, and then the new construction loan can be processed.
Do they have to own the land, or let's talk about that too. Can I do a loan with my local bank for the land, right? Like
no, the land has to be free and clear. The whole position that the borrower, the lender has to be in first position on it.
Got it. And so how long are those construction loans, generally speaking?
Until the job is finished. If it takes you more than a year and a half, your process isn't good. Yep. But it should take, we'll write it for as long as it takes.
Yep. And actually, we didn't even talk about that. So your general fix and flip on that primary loan, it's usually 12 months. What's your terms? 20?
Usually 12 months. Usually 12 months. But there again, if it takes you the whole 12 months, you're not doing something right. You should be able to do any fix and flip in 6 months, 8 months at the maximum.
Yep, exactly. And so what's the benefit of working with a hard money lender or private lender like you? Meaning, I'm relatively new. I know you're lending the money. What I like about it is it's an extra set of eyes on the deal, correct? You want to kind of talk about how that happens or what you've seen, I guess?
Yeah, you can't, if you're new, you're not going to get a loan unless the deal is a good deal. You're going to have my eyes on it. You're going to have a couple of different people's eyes on it. And one of the things we require is a certain profit margin. If you're not making a certain amount of money, there's not enough leeway in there for a mistake, and there's not enough profit to justify the work. So you have a separate, at least one more pair of eyes. One of the benefits of is I had a loan, they called me on Monday, the other lender bailed out, couldn't finance it. We financed it, closed on it on Wednesday. That's one of the benefits of dealing with a private lender or a hard money lender or a local, somebody that can pull it, somebody that doesn't have to go to the bank in Wall Street and run through the appraisal and all of that. The cost was a little more, but they would have lost the deal completely.
Right. So let's actually, like we're talking about lenders. What's the difference between, I won't use any of the other lenders' names, meaning let's say a big national hard money lender versus someone like you that's local. Like what would, because I always get the same question. We do have multiple lenders within our organization. The way I tell everyone is they're all good at different things. And sometimes it could be just service. And sometimes it could be that, being accessible too, right? Like versus maybe the bigger groups may or may not be, you're not working with one person. Maybe that's probably the way I would say it. So
the advantage of working with a private lender or a hard money lender that's local, that's lending his own money or out of a fund that he personally controls, is the speed with which the deal can be done. We analyze it ourselves. We say, okay, I can close this thing if title is ready. You can close it in 48 hours if title is ready. There's a lot of national firms that say they can do the same thing, but reality is it's going to take any national firm a minimum of 10 days. If everything works perfectly smooth, it's going to take them a minimum of 10 days. In reality, it's going to take them more like 3 or 4 weeks.
Yep, absolutely. It's funny, like I'm surprised no one's asked me this question, but I'm going to ask it because I always get the question about this. What do? You found a great property, the numbers make sense, and now there's a code violation with a lien on it. Let's say with a lien and without a lien. How do you generally speak about like?
You know what? I'll tell you, I just did a loan with that, and where they had code violations and liens on it. I could not get clear title. I had a list of the violations, a list of the liens. I knew the borrower, and I knew that their history was such that they dealt with them, and we loaned them the money anyhow.
So the norm is not like
the
I
norm
want
is not correct.
Yeah, most people will.
Well, let me back up.
Okay.
You can do them as long as you know what the lien is, what the cost to cure the lien is, and you put that in escrow. In this particular case, I didn't know what, I knew what they were. I didn't know the cost to cure. I just had the person's word that they would take care of it.
Yeah. So there's a couple of points, and he's right about that. If you know, we actually at BPM Maria, we actually do a lot of not a lot, but enough deals that we've done where there's been liens on it and they haven't given us a number. Since it's my money, so this is the difference between private money and versus lenders on that end of it. We're experienced with that. We know a lot of these city officials too. So I mean we've actually closed recently with a deal like $800,000 in liens. I put up the money, I closed on it. I knew we'd get it down for less than 10 grand. They wouldn't put anything in writing. We got in front of the magistrate. So it worked for me. A lot of big lenders won't touch it. Or it's difficult to get that number from the code enforcement or the city saying, hey, this is what the number we're going to agree to. So it is possible. It just depends on the city. And you want to make sure those numbers make sense. So it doesn't kill your deal. I could tell you with a bigger national lender, they're going to look at it real quick and be like, yeah, I'm good. No, I'm going to pass on this one, on that portion. So you want to make sure on your contracts that you're writing, you do have that in your additional terms about, that the property is free of liens and violations, if that's the route you're going. As experienced investors and even some of our buyers, I don't mind taking it with those exceptions because I'll even sell it with those exceptions. So the last house that we just sold had $26,000. We were getting it down to $8,500. And we already sold it to our new person and they were fine with the $26,000 and they're going to work it out. So it's kind of like, a loaded question on that, but especially down here, there's a lot of issues with, violations or the deal or the properties that you're looking at, I should say. What about, it's funny, I didn't really, wow, there's a lot of questions and we're going through all these things. Denise is asking, what's the minimum credit you would take providing the numbers make sense?
The numbers make sense as long as your credit's not full of foreclosures or, yeah. If the numbers make sense, there is no minimum credit score.
Yep. And what about, Christy's asking, when you refinance, what rules applies as to loan to value? So let's say, you fix it up, like, is it 70%, 75%, 80%?
When you refinance, it's that your credit's going to have a factor in it.
Yep.
But you can refinance at 75 to 80% all the time.
Yeah. So
of appraised value.
Right. So that's for easy numbers, right? I know, again, I always have to remind there might be some newbies on here. So if it appraises at 200,000, and if you get approved for 80%, it's $160,000 loan is what you're looking at. So, or if it's 75%, it's 150. So that's what it means. And then of course you got to take out the closing costs and what you have to pay off to your first loan, whatever that is, your original loan, and then you get the difference. So that's what the BRRRR method, and we've actually done a webinar in the past with Paul and Antonio highlighting his deal, which Paul actually funded and did part of the BRRRR method. So that's an easy way, not easy way. It's a phenomenal strategy to start building wealth.
If I'm not mistaken, Antonio walked away from that deal with no cash invested and a positive cash flow. Is that correct?
And $40,000 in his pocket.
In his pocket, yes. So the BRRRR method is a really beautiful thing.
And he's got over 100,000 in equity by right now, 120, almost close to it.
Yeah, that was a really, he walked away with cash in his pocket, equity in the building, and positive cash flow. And that's the beautiful thing on buying a fix and flip loan, turning it into a BRRRR, and keeping the property.
Yeah, and so some of you guys may have seen Antonio Lopez. He's been on a couple of webinars. He's a former student. He's a good friend of ours. And if you're on our Facebook page for BPM RIA, or if you're a student or friends with me on Facebook, I guess, I posted, I don't know if Antonio is even on today, but he received the member spotlight because of that deal and what he's doing for the community. So out of 40,000 plus members, they loved his story and they picked him as the member spotlight because he used so many different methods and he kept the homeowner out of foreclosure. So it's pretty cool. Again, we want to make money, but our idea also is to be responsible investors and really change communities too. So like a lot of times I always get as investors that you guys are just trying to take advantage of people. It's investors like us that are fixing up properties. So, homeowners could, live there with their family. So I don't get, confused on that end of it. If people come at you and you're an investor and you're making money, we're doing a couple things too. So don't feel bad about it.
Yeah, neighbors love us. Neighborhoods love what we do.
Absolutely. And so do associations too. So
yes.
Especially if you catch them up on their HOAs. And
so do banks, because we get them out of a bad loan. We have a very positive effect on a lot of places in our industry.
Yep. So what about reserve funds? So can those be leveraged, or if they can be used, how long do they have to be seasoned? So I'm assuming that you refinance. When we say reserve funds, that means usually for payments. Does the bank need any kind of reserve fund? So like when I say reserve, not with the bank, I'm saying.
I'm not sure what they mean by the reserve funds in this instance. If they're a reserve for construction, for renovation, if it's on a fix and flip loan, you probably need reserve funds, and you need to show that you have the ability to do the renovations. If it's on a DSCR loan, you need to show a couple of months reserves to make payments. Nobody wants to lend money to someone that has zero money in reserve. So you have to have some money there. Where does it come from? not that peculiar.
Yep.
If it's over $10,000, any deposit over $10,000, we just want to source the funds. We want to know where the money came from. But,
Yeah, exactly. When you say source, the lender or in general, they want to make sure, I'm not going to say illegal activities, but they just want to make sure it's coming from somewhere that they could track.
yeah, exactly. We just want to know, just tell us it came from here. It came from my mother loaned it to me. I sold a house. Just a letter of explanation.
Yeah, and that just so you guys know, that was back, and I forgot the year. It's part of the Patriot Act of like, banks have to make sure, it's not bad money or illicit money or any of that kind of stuff too. So I know, does Paul lend outside of South Florida? He does the whole state of Florida. Are you in any other states yet, or are you just still?
Yeah, I'm outside the state of Florida also.
Everything, or do you have only a couple states, just out of curiosity?
I've never denied a loan because of where it was. I take that back. Small towns, it can't be a rural community, but I've loaned to one of the members of BRIA in Oklahoma a couple of times. I loaned one in Maine, another member of the community. So yeah, it's not anywhere in the country.
Okay. What's funny? I think you touched on it, but no one's asked how fast you could close on that portion.
I can close 48 hours after I see title.
Yep.
After the title is clear.
Correct. So remember, you do need title insurance. Every lender is going to need it. What you also, they're going to have to order a lien search too. So depending on your cities down here, it could be very fast or very slow. So, and some of the cities do not have a rush lien search. So, if you're in some of the cities, it might take a full 10 days or 12 days. And those are business days, guys. So on Paul's end, he could fund, but you need these requirements for him to fund those deals. So that's always important. It's funny, I'm going to ask some of the questions I get that they're not even asking. What about the auction? Do you lend, or how does that work? I won the auction.
Well, there's two types of auctions.
Yep.
The government auctions, no, because you do not get clear title. You do not even get title for a period of time after you've won. You've got to pay for it before you get title. And so, no, I cannot lend on those. However, there are other auctions where, there's a clearinghouse that does an auction, and you can actually, after you win it, you might have 3 weeks in order to fund it, and you get title upon funding. Yes, we can loan on those auctions. But when most people can, the foreclosure auctions and that in the county, no, you cannot loan on those.
Yep. And so Michael's kind of bringing up a good point too, is first of all, I'm just going to say it is that, so the loans he lends on, they cannot be owner occupied.
Correct.
Right. So that's rule number one, right? You can't say, hey, look, I want to buy this house, live in it, fix it up, and do that. No go. It has to be an investor loan. Does the property have to be in an LLC, or will you do it in personal names or land trust or any, what's your requirements on?
I need an LLC. You can do a land trust also. It needs to be an entity other than your name. Although ironically, I actually did one in John Doe LLC. A guy, he thought he was being funny, and when we looked at it, we said, you know what, the name of it is not important, so we did one in the name John Doe LLC.
I hope it wasn't one of our funny members.
No, it was just, in reality, the name on the LLC is meaningless, and so the guy did it, and yeah, so it's just, you need an LLC though.
Yep. Absolutely. Yep. And thanks, Michael. Patriot Act of 2001. That's what I was looking for. The LLC, let's talk about that too, because I know, with some of the asset protection people out there, they're forming LLCs in different states. Does that matter to you at all?
No, that doesn't matter. As long as it's a valid LLC. I did one. I gave the lady 100% financing because she's a repeat customer, and she's got a Wyoming corporation. And that's fine. And she wanted to borrow 80%, and she's such a good customer. Since we make our money on the amount of the loan, I said, listen, Stephanie, I'll give you 100% if you want it. And so everything is negotiable on a loan, from the interest rate to the points to the LTV, and it depends on how good the borrower is. And,
Yes.
so can I lend to out of state? Yeah, she bought a house in Delray on a Wyoming corporation, and I gave her 100% financing.
Yep.
So,
Yeah, I mean, and he's right, because Paul's always asking me, he's like, hey, if you want to borrow, I'll give you 100%, you know, and I have no problem. I'll do all that stuff for you. He just doesn't throw in a lunch. If you throw a lunch in, I'd probably borrow. You know, those are the needs I need.
yeah, lunch, yeah, I know.
Do you require a separate LLC for each property?
No,
There you go. Let's see. When is the accelerated depreciation being lowered? At the end of the year.
man, that's a CPA question.
Yeah. So what I would tell you, Michael, Thursday, when I have Jose on, ask him. And by the way, thanks, Paul, for doing the right thing there. So like one of the things that we always like really, you know, Paul's an expert at what he does. I'm an expert at what I do. He's not an accountant or a lawyer. So a lot of people give a lot of legal and accounting advice that they shouldn't. So obviously, and the other end of it, you always want people to look at your own each situation, because my situation might be a little bit different on taxes versus Paul's also. So let's see. How does a DSCR loan work with hard money rehab? Single close or two separate closings?
Two separate closings normally.
Yeah. Yeah. So like remember, you're buying a property first, you're going to do the one loan. And then down the road, right, you're going to actually be able to, refinance and do that DSCR loan. Have you ever seen deals where, there was so much equity in it that they could just like buy it and cash out from the beginning, or 100%, or, like let's say the house is worth, for easy numbers, 50,000, or I mean, the house is worth 100,000 and you're buying it for 50. And, you looked at all the numbers and, like you're willing to lend 70,000.
Yeah, as a general rule, no, there are exceptions to that rule, and the answer is yes.
Yep.
But there has to be, I always look at a minimum amount. My loan has to be a certain percentage of the value of that property as is. And so there are times when I've lent money where they actually cash out at closing. It's a rare exception.
Got it. What about, and by the way, thanks for, I just want to let everyone know, I am just rapid firing Paul questions, because I know there's a lot. I mean, Paul and I could talk about one subject for 45 minutes. Like one thing, like, what about this? So, my goal even today was like, I'm just going to bombard them with as many things, more of like a rapid fire kind of situation. What about Airbnb, right? We are in, I feel like the short-term rental, capital, on that end of it.
Let's take Antonio Lopez's loan.
Yeah.
Antonio Lopez was on an Airbnb.
Yep. So what, like, let's talk about the income. How do you underwrite, or how does the lender underwrite an Airbnb, on a refinance? Are they, going to do 1 month? They want to really see numbers. Are they using regular rental rates in the neighborhood, or how does that work? It's kind of,
I don't know the specific answer to that.
Okay.
On an Airbnb DSCR loan, I submit that and they come up with it. They come up with it on the appraisal. The appraisal gives them market rents and market, and so then they apply a percentage of that and consider it.
Yep. And so what I've seen, and just in the past, what I've seen is if you actually have, and again, so let me go back to this a little bit. Everything that we're talking about, we are in a moving market. So what happened 3 months ago may not happen now. What we're talking about today, lenders, something drastic happens. So, what I don't want is, like 3 months later and something, I don't know, happen in the economy, something crazy. And you guys, and people come back to us like, hey, Paul and Anish said you could do this. What we're talking about, what's happening today is what I'd rather say. So I should have probably started with that.
Yeah,
Our
and what's
webinar
happening today might change by Friday.
Correct. And that's what I'm saying, because on the short-term rental world, what I've seen is that there were some lenders, they were taking, the Airbnb rates, and then they kind of stopped a little bit, unless you had a massive, again, there's always exceptions, what exactly what Paul's talking about. You own 200, short-term rentals and you've been with them for a while and you got a track record, is a different person than me just having one Airbnb. I have seen in the past, and the reason I was kind of asking that question is that if you bought an Airbnb and you actually had the numbers for 2 years, they were taking the average in the past, right? So if it's a new one and you're buying short-term rental, they probably won't, is what I'll say, on market rent. And also when you're underwriting these deals, let's talk about that too, because I see these mistakes. Everyone's always looking at the Airbnb numbers in general. Like, well, what happens? And I have a 5-unit building. We started doing Airbnb and the pandemic happened. So no one knew what was happening, right? Everyone panicked, including me. So guess what? We put long-term tenants in there and the debt service still covered it. So I was fine. It wasn't a big deal. So you want to just make sure you do have an exit strategy and a backup plan when you're looking at these short-term rentals too. And one of the things that we've been listening to our members, actually I spoke to Antonio about this yesterday, is that we are actually going to do a short-term rental workshop for the day. I don't know, I'm not sure what the pricing is and all that good stuff, but I just see a lot of people making a lot of mistakes out there, not knowing on that portion, whether it's from, permitting or all these other things that are happening that could easily wipe out your business. They're not looking into, there's some buildings in Miami right now that are high rises that the whole building just got approved for Airbnb, new construction. So there's a massive lender that's actually funding that project that I saw recently that's coming up too. So if you don't start adding what's happening out there and your head's, in the sand a little bit, you're gonna get caught with your pants down is probably what I'm gonna say. So on that portion. So the other thing is, right, let's talk about scalability, right? You kind of talked about, you've been lending for a long time. Again, I don't know these questions. I don't know what Paul's going to say, but out of the years that people have been with you and they were a newbie, or maybe they did 1 or 2 loans, how much have they scaled their business is probably what I'm going to ask. They went from, hey, I just did my first loan with you, 3 years ago or 5 years ago. Where are they at now is what I'm going to say.
I took a flyer on a guy 4 years ago building his first house. And I've got 11 new loans to process in the next 60 days with him. So it's so much of this money is, there's a personal thing of what do I think? We judge risk and reward. And the guy intelligently used leverage, presented his first deal to me in such a way that I looked at it and I say, he's got every I crossed, he's got the T's crossed, he's got things that I didn't even think of covered. And so it depends on experience and ability. If you've got the experience and the ability and the system, I will provide the money so you can scale it as much as you want. Those are the hard things to find. The hard things to find is the experience and the system in a good borrower. And if the borrower comes with that, the money is the easiest thing to find.
Absolutely.
So
yeah, it makes a big difference. When, like, my point of that story is that could be you, right? If you're new and you do one deal, and now, he's talking 4 years later, he's doing 11, loans with them, and he's starting to build a portfolio and generational wealth. And what, the other question I always get to is, I know we talk about points and interest rate. What else on fees, right? So, because I've seen, hey, the points are less versus one lender versus another. But then I'm going to call them, in my world, I'm going to call them junk fees. Meaning, hey, they're only charging me 1 point and X amount. But then you really look at, I don't know, whatever fees you want, like underwriting. Like, so some of the fees are valid. Like, I don't want to say, I'm going to kind of use that loosely. In my world, I could say all the fees are valid, but some may or may not be negotiable. So if you're really looking at 2 lenders, what would you say, what to look out for investors?
On a hard money loan that we're doing locally, that there are no junk fees. You know, interest and points. You're gonna have to pay the attorney, no matter what, anywhere. On a DSCR loan, running through a fund, they're gonna have a total of probably $1,400 worth of what I call junk fees, but $995 of that is an attorney fee on their end. So you're really looking at $400 or $500 worth of junk fees.
Yeah.
There's no application. I don't ever have an application fee or a credit check fee. You know, that's all BS. There's no money put up before there's a loan.
Yeah.
Yeah.
Yeah. And
There's lenders that make their money just on application fees and then deny the loans.
Correct. That's what I was trying to get to, was that it happens all the time. You know, so I've seen it a bunch of times. You've seen it, and on that portion. So don't just, you know, when you're looking at, you know, points and interest. And the other reason I was kind of asking, you know, Paul about, you know, how that person went from 1 to 11 is, if you constantly hear what Paul's talking about, it's relationship building. And since he is the owner of Flipper Loans, you're building that, you know, if he sees a track record and says, hey, this guy or gal is, you know, doing a good job. I lent the money, they pay in a timely manner, right? All that other stuff. He's going to feel a lot more comfortable, right? Versus the newbie with no experience on that end of it. What happens, right? And you know, let's talk about the things that no one wants to talk about. I got a hard money loan and I screwed up, right? And now I can't make payments. And I know you're calling me, Paul, and I just sent you the voicemail, and I send you the voicemail, and I block. Like what should you do if, you know, let's just say, unfortunately, something doesn't work out? How would you, you know, want your borrower to handle that?
But I'll tell you this, I haven't had a problem with a loan in 2.5 years. I mean, it's possibly because I look at the loan ahead of time. It's not that I'm super conservative, but I want to know that you're capable of doing it, that the deal is a good deal. Last week, I told two of my borrowers that I won't lend on that deal. It's a bad deal. And so I don't lend on a deal that you're going to lose money on. If you have any trouble, call me, because I've got 100 people that will buy out of. If I've loaned on a deal, it's a good deal. If you're having trouble for whatever reason, I have somebody else that will buy that deal from you.
Yeah. And the reason I'm bringing that up is, like, you know, it happens, right? Like, whatever, I don't know, you're in that situation, right? Like, you can't make those payments. To bury your head in the sand is not the answer. Just suck it up, right? I mean, you know, Paul's on the line too, right? It's his money, or, you know, access to his money, and he wants to fix it. So the more time that goes by, the worse it's going to be for everybody on that portion. So you want to make sure you're contacting him. You know, Michael's asking, it cracks me up. It's like, you know, obviously he's been in the business for some time. He said, what is one thing that you do faster? What is one thing you do to foster those relationships? When we talk about
don't lie to each other.
No,
Tell each other the truth.
Yeah.
Whatever that truth is, tell each other the truth. And there's nothing that a lender or anybody hates worse than being told something that's not true. And if I can count on your word and you can count on my word, we got a beautiful relationship.
Yeah. What about you know, wait a minute, it's funny. Like, it's funny. I'm just thinking some of the random questions that I always get to, and hopefully some of you guys actually saw our webinar I did with Paul and Herb Lander, another lender through our group, and we were just talking about horror stories and kind of fun stuff that we did. What about lien position?
First lien position, 99.99% of the time. I do make exceptions, but not often.
Yep.
Very rarely.
Yeah. So that's the other, right? So because I get those calls all the time from people. Well, I already have a loan with this. I only need an extra this to finish the project. Would you lend it? Which I become second lien position. And I say, no, I'm pretty good, you know, on that end of it. So the other end of it is just, I know, because I do get those calls, you guys wouldn't know this, but I only lend money or put money up for our students. I have people like Paul that this is their full-time job. They're licensed lenders in the state. So that's not what I do full-time. I always pass them on to someone like Paul. That's their business versus someone like me. But I do get those questions all the time. I only need about this much to get it done, or a personal loan or something of that nature on that portion. So just make sure you reach out to Paul when it comes to that. Let's see. Do you allow a loan to be assigned?
I'm not sure what she means by that.
Yeah, I'm not sure what that means either on that portion. So let's see. If you do have, one of the things, I guess, what are your rates, points, time frame for hard money? Jose, we kind of talked about earlier, 2 to 4 points. You could close as quick as 48 hours.
Yeah,
right?
my question to him would be, how is your credit? How is your experience? And what is the deal? You know, you want to ask a general question like, what are my rates? It varies with who you are, what you're buying, and what you've been doing. So
yeah. Let's see. The other end of like Victoria's asking, let's see, versus doing the Burr method and DSCR. She's got a 780 credit score and at least 20% to acquire. Is the Burr method, or I know you're worried about the prepayment penalties.
hi, Victoria, please call me with that. Yeah, you have the things that a lender likes to hear.
Yep, exactly. So yeah, you're talking dirty to
Exactly.
on that end of it. So the other thing, before we even, we're going to kind of wrap it up soon too. So what I want to tell you is on the 23rd, that Saturday, that we're going to show you how to wholesale deals, what we've been doing. Paul's sponsoring it with us on that portion. He's going to be there. He's also going to be there at the 20th in Boca. Come meet him, ask him the questions, meet him personally. You're going to see, actually, Paul's pretty tall too. So he always does look down on me, but that's usually just a physical thing.
One of the things I never do is look down on you.
No, you're taller than me. That's why I'm.
Yeah, maybe.
and that's, and if you guys come and you haven't seen us, you'll see how tall I am not on that end of it.
I wish I had your knowledge. I wish I had your knowledge.
Yeah, right. So don't let Paul butter you up, man. Watch out. He's a smooth operator. So on that portion, any last minute, things that you want to touch on, Paul, because our 90 minutes go by so quick. It cracks me up. We literally answered well over 30 questions, besides probably the 20 I nailed on you in 90 minutes. It's been kind of crazy on this portion.
Yeah. I know this, that the people that are doing something are making money. The people that are watching are not making any money. There's a risk and reward. And if you're on this video, you're at least spending time here. Do something. Initia's got a program that'll teach you how to do it if you don't know how to do it. But those people that take action make more money than those people that do not take action.
Yeah. And so like, let's, because you've worked with a lot of investors, you've seen, people grow or not grow, right, on that. So what are some of the characteristics of what you've seen because, what we did last time on that webinar was talk about, deals that kind of fell through, and that was a mess. Because I was getting tired of everyone always thinking everything's always worked out for me. I've had a ton of things that didn't go through my way because I didn't really have the education, speculation. I only saw what I wanted to see. I didn't reach out, right? So I'm going to use, I'm going to put myself on the block a little bit. One of my biggest breakthroughs in what changed my real estate career or my financial career was it was okay not to know everything. Like I'm asked, you heard me ask Paul a bunch of questions that I have no idea. He's in it. And as soon as I gave myself the freedom of not knowing, and it doesn't mean anything about me, I felt better. But what I did was I have someone like Paul, that I could, hey, Paul, what do you think about this? If I got an insurance question, Bob Pepe, give him a quick call. Hey, what about this? Kevin Thatcher, about title. If I have a question, you do not need to be an expert on everything, right? Because it's going to be an excuse of you doing nothing on that portion. So what have you seen as a characteristic that you've seen people that are successful in real estate?
I mean, you almost hit it on the head. Those people that ask questions to things they don't know. And yeah, that's it, because you have to get education. You get education by asking questions. And there's a certain degree of courage involved in the ability to take a risk, to step outside your comfort zone. But yeah, those people that do it, as I say, an entrepreneur puts his capital and his time at risk and at work. And it takes a special breed, but that special breed historically does very well. And be educated. And there's,
I'm going to give you like, so the younger, like, so as an old person, so I'm just going to put it out there. So what I've seen, like that's happened for me, and I know because of social media and all the things that are happening with technology, and everyone wants to make money like yesterday, right? Like they're building a business, and like I talked to one homeowner, and it doesn't work on that end. Like this is the long game, guys, right? So yeah, I mean, you might do a deal or two right away, or it might take you a year on that portion, but you got to put yourself out there. The other stuff is teachable. I promise you, how to fill out contracts, evaluate properties, how to figure out your finance, like all that stuff is teachable. But we can't teach you to go out there and make an impact. For me, really what was happening was I was tired of being on the sidelines, right? And unfortunately, I love my parents to death. They were, a financial analyst and accountant, always work for a company, your 401k, and things will work out. And as my dad got, started retiring, and it didn't work out for him. And I didn't want that. So my why was strong enough and say, hey, I'm going to go out there and try. The other big thing I always kind of laugh about is whether, when I didn't have much money and I was knocking on doors, and people would ask, like, how many doors are you knocking? Or how many sellers are you talking? And I go, I really don't remember. I only remember the yeses. And the yeses on these wholesale deals are 25, 35,000. So when I talk to a seller, or, I'm flipping a house, or, wholesaler, I'm always, this could be a $10,000 conversation on that portion. So it happens to, some of you guys have seen the other mentors on our webinars. Some of the things that we've done, Paul, I was kind of laughing, is that our newer students, we're actually asking them, they don't have to do a 30-second video why they want to be in real estate. And I want to show them that video because, Harry, Victoria, Taryn, Denise, and Lucian, they walk around so confident now. Like it's crazy, like this. And I remember, how scared they were, or how scared I was on my first deal. Like, oh my God, I'm not sure of all those insecurities. So it takes time to build that on that portion.
Yeah. When I learned to knock on doors, I learned to say thank you when they said no. And when they said yes, I said, oh, great. Now I got to go through a bunch of no's again. And, but the no means you're that much closer to the yes. When you get a yes, now you got to start over on the no's. But just keep banging on doors. If what you're doing is knocking on doors, it's a numbers game. Just keep knocking on it. And look forward to the no, because that means your percentage of getting a yes just increased.
Yeah. And the other thing I'm going to add on it also, it's relationship building. And that includes with the seller. If you're knocking on doors, they might sell to Paul because they just like him more, and he might be offering less money, or they trust him more. So, like, be honest, be nice to people. I know this sounds so basic. I can't tell you how many, I get people that cold call me. I'm like, really? Like, you're like, I know you're mad, but like, even if I wanted your product, I wouldn't use it too. So I think it's just one of those things. You're just like, it's common sense of what's out there. The other thing I'm going to tell you, Paul's going to tell you the same thing. There's always going to be competition, right? So if you're waiting for a time where there's no competition, I tell people, I'm a little more sarcastic than Paul. I'm like, hey, just watch some Netflix. Like, don't even, do something else, spend time with your family, because you're not going to be able to time it out there. So just, if this is what you want to do and make it a win-win, and that's how it always works out. We are also putting in the chat, if you guys didn't get Paul Regan's information, Alexa's going to put it in the chat. Otherwise, it is also on our website. Run deals by him. What I would tell you is, instead of, I'll let you kind of answer it, but instead of asking what he lends or if you do this or that kind of stuff, I would say if you have a potential deal you're working on, first, let him kind of look at it and see what he'll lend and let him ask you the questions. Because there'll be a lot of people, Paul's going to say, well, it depends on this, it depends on that. Like you're going to want to interview him, but I'm going to say it's going to be a waste of time because he's going to want to know what the deal is. And then he's going to figure out if it works or what level, right? Is that the easiest way I could say that? Versus everyone just calling you and say, well, what about this?
I get those calls and I say, well, yeah, I want to know who you are. Yeah.
I mean, I get those too. I'm just saying it's like, it's just more efficient for you as a potential investor and to make it a win-win, because, sometimes people just want to chat on scenarios and they've never even talked to a person yet.
Right.
So. Awesome. So we are the full 90 minutes. I did put Paul on the hot seat a little bit today. One of the things, so that you guys know, we had some topics in mind in general. And, the idea of these kind of webinars is really, it's not scripted at all. So I can tell you that. Meaning, like, we want to, we have these conversations, Paul and I, over coffee or lunch. And we kind of, our format, what we're trying to do with some of our vendors is that you guys are sitting in on our, our cup of coffee. And these are the conversations from whether it's inflation, the market, all those kind of things. And it's a good way to listen in, and you guys are indirectly involved by asking those questions too. So Alexa, do we have any last goodies? And remember, Paul's giveaway is if he funds your first 3 loans, he's going to credit you $900. So $300 lender credit automatically, or Paul credit, I'll say, I don't want to say lender credit, Paul's credit automatically. So we're literally paying you up to $900 to be on this webinar. What a world we live in on that portion.
If you're here, that's it. No replays. Just kidding. Seriously though. But yes, I'll send you guys all a follow-up email today, so you don't forget any of this information and you know exactly where to find Paul's info. So look out for an email from me, Alexa at bpmria.com. And I'm going to see you guys again on Tuesday before the Wednesday night meeting, but I'm really pumped about Boca meeting. So if any of you guys are in the Boca area, highly recommend you RSVP for that meeting at 5:30. It's going to be awesome.
Yep. And Alexa's going to also send in that email from her a link for a Google review. So hopefully you'll give us a 5-star Google review, about this workshop, about Paul, about our organization. We want to get the word out. The reason we're doing these things is that we constantly want to build community, right? So as we have more members, more people in our network, you'll be surprised, like the different special things that people are really good at, and it makes us stronger as a team. So that's why we're trying to get the word out. Obviously, this replay will be on YouTube, though. She was only kidding. But our free events are on YouTube. We also have a second YouTube channel that we've done that I'm doing with one of our students. It's kind of a funny end of real estate. So hopefully you'll start subscribing. We're always looking for topics. And again, I want to thank you guys. I will hopefully see you Tuesday at our next webinar, Wednesday in person, Thursday. My goal is for you to be sick of my face and my voice. Then I know I've done a good job. And I want to thank you guys again for everything. And Paul Regan, as usual, it's always great to have you.
Thank you.
Paul, looking forward to seeing you Wednesday, Paul. And yes, everyone have a phenomenal rest of your day. and look out for the email from me. That's it. Bye, guys.
See you again.